place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled 9 Tips to Spring Clean Your Finances. Mike, when we look at getting things squared away to start a year, one really important place is just making sure that your accounts have the right beneficiaries on them to begin with.
Yeah, I've seen this ignored. It's rare that it comes into play, but certainly if you pass away or if your spouse passes away, it's going to make life a lot easier if you've thought about where the accounts go after the fact. I cannot tell you how many times I have seen people leave an ex-spouse, for instance, on as a beneficiary without really thinking about it, or the number of times where people have made changes to their estate plan but not change their beneficiaries.
And a piece that goes along with that you mentioned there is making sure that your estate plan is also updated as well for life events or changes in your family situation that may have occurred.
Absolutely. I mean, not everything is going to have a beneficiary on it, but there's additional confusion there too, right? I change my will or I change my trust, and I don't tell the investment company that manages my 401k or my investment account. Those two things do not talk to each other, and in many cases, the beneficiary will supersede the will, the trust, these things that you think you've taken care of by visiting the attorney and checking all the boxes, but not necessarily depending on how you do it.
Our guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Tuesday edition of the Financial Exchange. Paul Lane, Marc Fandetti, and Tucker Silva here with you. We got a jam-packed edition of our program today. There's a lot to talk about between earnings reports, mergers and acquisitions, economic data. There's really a lot to get to here. As we start off on the week here, we've got stocks trading in the negative territory with the NASDAQ down close to 200 points, the Russell down a 1.25%, and the S&P 500 off over 0.5%. Like I mentioned, a lot to get to. We're coming off a long weekend, so I hope everyone who had the long weekend or had Monday off enjoyed their time away from work. But we jump back in here today, Mark, and I think it's good for us to just take a look back over the course of the last week, because we have seen a pretty seismic shift in terms of the focuses of investors and economists out there. This has been something that we've monitored for a long time, inflation and economic reports. However, what we seem to see last week, this is not something that is new to us, but I believe to many others out there, sort of this realization that perhaps getting this last mile of inflation under control is going to be a little more challenging than others may have thought previously.
The whole framework is wrong. There's no last mile. There's no soft landing. You can land for a time. The economy's fluid, constantly buffeted by shocks in either direction. This is where it's helpful to have some perspective on economic history. It allows you to move away from the day-to-day headlines, which are mostly noise, i.e. not meaty and not helpful in predicting. Not that much is, but day-to-day movements are especially unhelpful in most cases in predicting our economic future. The idea that the economy was going to land softly is true as far as it goes. I mean, if your definition of soft landing was inflation comes down by a lot without a big rise in unemployment, that notwithstanding a long history suggesting otherwise, i.e., and by that I mean big disinflations, declines in inflation have always been accompanied by a lot of economic pain. Many of us are old enough to remember the recession of 1982, when unemployment went to 10%. Inflation came down by several percentage points at more or less the same time. That is textbook, as economists like to call it, sacrifice ratio. That didn't happen this time is something of an economic miracle. We now know that those supply chain snarl-ups were a big contributor to both inflation in 2021 and 2022, and demand played a role too. The Trump and Biden stimulus payments goosed demand at a time of constrained supply. Of course inflation was going to go up. Many researchers did see that coming. We've had the opposite happen over the past year and a half on the supply side anyway. So here we are, inflation over the last year back down to roughly 3%, though there are many underlying measures that suggest that demand is again running in excess of the economy's capacity to produce. We could talk about those as things unfold. So we're again at this point of uncertainty. It's sort of a juncture. So I guess my larger point is don't get hung up on the soft landing narrative. The economy never lands. Inflation is always a potential threat that policymakers and investors have to do their best to adapt to. Underlying inflationary pressures don't seem to have been fully squashed, and people following the right measures would not have fallen for the head fakes of the past several months.
What we saw last week, just to go back in time here, last Tuesday we had the January CPI report come out, and what we saw in that report was a month-over-month increase of inflation of about 0.3% year over year. As Mark mentioned, CPI, or Consumer Price Index data, has been running around 3%. However, if you look at core inflation, which is this other metric out there which strips out food and energy, that year-over-year number is about 4%, and the month-over-month increase is about 0.4. These year-over-year numbers, relatively speaking, are not too bad. 3% is a significant improvement from where we were hovering around 9% over the course of last year. But something that I do want to point out, and was really interesting in a Bloomberg piece last week, and it speaks to what, Mark, you've been saying for a long period of time on the impact that the supply chain snarls had on the initial inflation and then the subsequent disinflation from that period of time. Bloomberg did a piece last week where they put together a graph, which you would love as you have a affinity for bar charts and graphs of the sort, Mark. But really what it broke down was the contributions from these 4 different categories on inflation. The 4 categories were food, energy, goods, and services. And they weighed out the impact that they had. And initially, when inflation started and when we had this conversation beginning in mid-2022 and inflation became a real problem, it was relatively evenly spread amongst those 4. It was food, energy, goods, and services. All 4 were having an impact. However, I would say that goods had a pretty significant impact. That demand for washing machines, TVs, all those sorts of things, that inflationary pressure really rose significantly. As the graph began to unfold and we're looking more at recent data, what you'll see here is energy, as we know by going to the pump, really is no longer anything that's contributing to significant inflation. In fact, it's helped bring down that headline number that I spoke about just a moment ago, that 3% year over year increase. Food still has a small impact, but very minimal. A lot of the food pricing power has come down significantly. Goods have subsided as well, Mark, to your point, this idea that supply chains got back in order and we're really not seeing as much disruption there. There's also a bit of less demand for that goods side of things. A lot of us during the pandemic really rushed those purchases ahead of time because we had excess cash flow. The last one, though, services, those continue to be the most significant contributor to inflation. And those services sector, it's the hardest one. It's a very sticky piece and it's very difficult to get under control.
I actually don't love decompositions like that because it gets you hung up on the trees and you lose sight as a result of the forest. And by that I mean inflation in a fundamental sense results from demand running ahead of supply, either because the government is goosing demand or the monetary authorities, what we call the Fed. Most developed countries have independent central banks. They perform a similar role, has put too much money into the economy, which also gooses demand through pretty familiar mechanisms. Interest rates, which they target going down, and that's stoking demand for goods and services. So the persistent measures, the measures, and you cited one, core, which is X food and energy. You can slice inflation in other ways to strip out not just food and energy, which is kind of arbitrary, and that comes out of the experience of the 70s. You can cut off large movements up or down in either direction by trimming means. An extreme version of that is the median, which we're all pretty familiar with. It's just the one in the middle. You hear about median home prices and median salaries all the time because you don't want the big numbers to distort the average. The average, said differently, is not robust to big outliers. So if you look at mean or trimmed median, which tries to do a similar thing, underlying inflation is running somewhere in the 4s right now. And I'm being a little bit generous, way above the Fed's goal. So while it's interesting to look at, and we should, the decomposition of inflation, was it goods, was it services, was it coming from this sector or that sector, you can get lulled into a little bit of a, sense of complacency about it because you convince yourself, well, that's going to go away. supply chains are going to normalize and inflation will be solved. And there's a big camp among monetary economists right now, or macroeconomists who study the whole economy, thus macro. There's a large cohort of economists right now who think it was all about supply chains, we're good. There are others who point out, though, that, geez, the economy still appears to be running hot. GDP, real gross domestic product, the way we measure what we produce as a country, was up over 3% last year. That's significantly higher, almost 50% higher than what most researchers think is the potential for the economy to produce goods and services. Unemployment, unnaturally low, still below 4%. It's been there for over 2 years, longest streak since the 60s. There are other measures, too, that suggest the economy's exceeding its speed limit.
Yeah, I would argue that I bring up that point on the services side of things, not to say, the supply chain issues.
No, you weren't. I'm sorry.
Okay.
Weren't.
I was going to say that
But
I'm sort of making that point to say, gee, I look at that, how does that get resolved? It's just more difficult. It's more of an uphill climb on top of those other factors that you mentioned, a strong labor market and a strong economy in general from GDP. I want to take a quick break here, but I do, when we want to get back from break, go into GDP growth and the economy and the labor market, because that really ties in neatly with what we're seeing from inflation and all this rate conversation. So we're going to take a quick break, but when we come back, we're going to dive more into those fronts right after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law, and if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Last segment, we were discussing the inflation report that we received last week, which was a little hotter than most had anticipated. And now there is more scrutiny, or there's always scrutiny. We continue to digest these economic reports as they come out. Some of the reports that we've seen that have put a little bit more focus on this idea that, gee, the economy continues to remain quite resilient, even in the face of what the Fed has hoped to be restrictive policy, though those could argue that perhaps it has not been restrictive.
You know what else is
enough.
weird about that is that you can't really test whether or not some have said, and it makes sense superficially, that Fed tightening hasn't done anything. The economy's still going like gangbusters.
Mm-hmm.
But you can't really test because this isn't an experiment. We just observe the data and then try to parse it. We don't know. Maybe the economy would have grown at 6% year over year, and the Fed actually restrained it. Maybe inflation would have run twice as hot. We can't see the economic activity that didn't happen. It's very difficult to test for. You can't cut the United States in half and do this Fed policy on this side and that Fed policy on that side and run them as a race and see which ended up being more prudent or stabilizing. So we don't really, you didn't make this point, but some have, and I figured, what the heck? Let me interject with this. We don't really know what Fed policy has done because we don't see the activity that didn't happen, and researchers can't test what would have happened because we don't have an experiment set up, unfortunately.
Again, this is going to be us just pulling from our hip here, but I would surmise that with the borrowing costs that we've seen them over the course of the last year or so, it certainly has slowed down housing transactions, which are a fulcrum for economic activity. We're going to get into Home Depot's earnings and what we saw there from a consumer spending side of things on that sector, on the housing. So I do think that it certainly has had an impact, and I'll get into that really more when we dive into Home Depot on the borrowing side of things. But we also saw a jobs report for the month of January that came in at 353,000 jobs being added. Now, there's some arguments being made, and again, those monthly reports can get a bit noisy. In particular, they use seasonal adjustments for that January one, where there's this idea that for the holiday season, a lot of temporary workers are hired and then subsequently laid off. So they were trying to account for that.
Seasonal adjustments. The conspiracy theorists come out of the woodwork on season.
They really
for
do.
Goodness sake, folks. It's just, I know nobody who the people listen to this show are smart and discerning. They know seasonal adjustments are just math, just statistical. I'm being a little flip, but give me a break. It's done routinely. These are career statisticians, not people with an agenda. There are certain news channels that become apoplectic over seasonal adjustments. It's nothing. It's routine. It's necessary. Sorry, Paul. Just thought I'd make that little public service announcement.
Don't get
Train your fire elsewhere. Seasonal adjustments are pretty darn innocuous.
Part of the deal. So very strong labor report. However you want to slice that number, maybe you can pick some holes in it,
yes.
but a very strong number there. The inflation number we covered during the first segment of the show. We also saw the U.S. economy, the GDP, our economic growth, the economic activity here growing at a 4.9%. With inflation being accounted for in Q3 of last year and 3.3% for Q4.
Can we put that in perspective, by the way? I mean, 3% year over year. Go ahead.
Typically, that number's 2. 2%
over the past 20
growth.
years, anyway, we've become like 80s and 90s were 3 to 4. Those were the heady years. We had 3% growth year, I think, during. Because it's easy to think about these things in terms of presidential terms. I think Obama hit it once. Trump hit it once. Biden's hit it twice, but largely because of a strong bounce off of a dismal 2020. So 3% in the modern era, real, like you said, after inflation, has become kind of a rare thing because potential growth has slowed so much since the 90s.
Particularly in a year that was supposed to be or was predicted to be a recessionary year, to see that type of growth is really astounding. And where we sit today from a rate perspective is these now March cuts that had been talked about in December for the upcoming meeting here. That is just, there's almost no chance of that for the month of March. The next one in May, it still appears that the majority are siding with that there will be no cut for May's meeting. And then for June, I believe we were sitting in around 50-50. Now it's a little bit higher that perhaps the first cut could be seen in the June meeting. But basically the long and short is this idea that rate cuts, they've been tabled, and quite honestly, from an expectation standpoint, I know these futures are their probabilities are suggesting that perhaps we see one in June, but it's something that really needs to be tabled. These reports that we just talked about, 3% GDP growth, the inflationary report for the month of January, the jobs report for the month of January, all of them running too hot. The only caveat that you could make or counter argument is that maybe retail sales came in a little bit weak for last month, but this idea of rate cuts really should be shelved for quite some time here.
There's sort of a technical argument for it, and it mostly comes from economists who are on the left. It doesn't mean they're not great economists, but their judgment, as is mine, as sort of a conservative to libertarian type person, my judgment is warped too. I favor tighter policy generally. This is not a new argument, by the way, because people on the right and left have been fighting over monetary policy since specie backed our currency. We all know about the argument, the populists in the 1880s and 1890s.
I don't know if we all know about that.
We all learned about. We all learned "Don't crucify me on a cross of gold." William Jennings Bryan. Everybody heard that in high school.
No,
you remember that?
You're giving everyone way too much
you've
credit.
Heard that
Tucker,
expression.
did you have that?
I hear that on a daily basis, Paul. I don't know what you're talking about.
You've heard that expression, guys. We grew up in New England. We got good public or Catholic school educations here. This is not a new argument. There are easy money people on the left who would take a little bit more inflation in exchange for lower unemployment. God love them. There are people on the economic right, and I'll just speak for myself and probably a lot of people listening because they care about their money. That's why they're listening, who worry about inflation, remembering the instability that it fostered in the 1970s and knowing a little bit about the history of, say, republics and the way they can succumb to turmoil that inflation can accompany political turmoil. So I think this comes down to your political predisposition. These people on the left are arguing that, well, the more inflation comes down, the more the real rate goes up. And we can talk about that at some point if you like. That's their argument. The problem is that's conceptual. That's theoretical. The reality is we're in a very strongly performing economy right now, and that's typically inflationary.
Question to you. You, as you mentioned before, always kind of favor more of the side of being restrictive in terms of policy. There was a piece here, I believe it was in Bloomberg, this idea that perhaps rate hikes would be on the table for this year. I don't see that. To me, it would just make more sense to leave rates where they are for now, but curious.
We don't know if they're restrictive enough. This is the argument we were just talking about. People on the left and people who are, for whatever reason, think inflation has been vanquished and will continue to come down on its own, think the natural rate now has been achieved, more than achieved. Thinks Fed policy is restrictive and should be relaxed. People on the right see an overheating economy and think Fed policy should be more restrictive.
We shall see. We're going to take a break here, but when we come back, we're going to have Wall Street Watch, and we're talking about Walmart's big acquisition. That's right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, investors are returning from a holiday weekend and are readying for a fresh batch of fourth quarter earnings, including Walmart and Home Depot this morning with mixed results. And NVIDIA on deck tomorrow afternoon after the closing bell. At the moment, Dow off by 33 points, S&P 500 down by nearly 0.75% or 35 points, and the NASDAQ selling off by nearly 1.5% or 218 points. Russell 2000 off by 1.25%. 10-year Treasury yield down by 4 basis points at 4.25%. And crude oil is off by over 1/3%, trading at $78.90 a barrel. Big news from over the weekend was Capital One's massive acquisition of Discover Financial Services for more than $35 billion, which will merge two of the largest credit card companies in the country. Paul and Mark will have more on this deal in a matter of moments. Shares in Capital One down by 1%, while Discover stock is jumping by 12%. Meanwhile, Rosenblatt nearly doubled its price target of Super Micro Computer, calling for 62% upside moving forward, marking the highest forecast of the chip maker's stock on Wall Street. However, that stock retreating from its recent rally, now down by 12% so far today. Sticking with the tech sector, with Intel shares edging higher by about 0.25%, following news that the Biden administration is in talks to award the chip maker more than $10 billion in CHIPS Act subsidies in the coming weeks. Elsewhere, Evercore ISI downgraded Caterpillar to in line, noting concerns over a longer than expected outlook for earnings growth. That stock down by 2%, and shares of Medtronic are up by 1%. After the medical device company beat top and bottom line forecasts, where the company also provided a higher than expected full-year earnings guidance. I'm Tucker Silva, and that's Wall Street Watch.
I'm sorry, we're giving Intel how much? Tucker, Paul, do you mind if I...
Yeah, you can go off on it.
I'm not. Well, I guess I do want to go off on it. This company has $25 billion in cash to my... And that's according to our little resource here, Y Charts. It's public. Anybody could Google it, maybe even get a more current stat than that. So no issues with cash on the balance sheet. They are publicly traded, obviously. Mm-hmm. Stock hasn't done much, to the best of my recollection, for a very long time, but still a healthy overall business. They have no problem generating free cash flow. We're giving them, was it 10, Tucker, or...
Yeah, 10 billion, yeah.
$10 billion.
Somebody's got to explain the rationale to me, other than that some bureaucrat, and I know this comes out of commerce, and we all respect Gina Raimondo and her staff. She's got a lot of capable people with a lot of private markets and other experience working for her. But are you kidding me?
It seems like unnecessary money to be given to them. Really, the markets in general, this is why we have public capital markets. These are the ones that should shake out the development and the building of manufacturing facilities for semiconductors. It shouldn't be financed through government, and you just question how efficiently Intel is going to spend this $10 billion handout. The reason that they're doing this from a political standpoint is that from a chip design, a chip manufacturing standpoint, Taiwan and South Korea dominate the manufacturing, and there's concerns that if China ever were to invade Taiwan, it's a huge resource that they are having here. They have a tremendous lead in the category. I don't know if $10 billion, I do know $10 billion really in this space, it's heavily capital intensive. This one $10 billion shot will not be enough for them to catch up with Taiwan Semiconductor, which is huge in the space. Samsung's another big one as well. So it just seems like throwing money out there with not a need for it, because you have public capital markets if they want to raise capital to do this.
Yeah, it just makes me really, I understand the strategic argument. I can't argue with it on its face, But your argument about government allocating capital less efficiently than private markets, which can be ruthless and tough, is, I think, the key one for me. And plus, there are reports of growing gluts in chips. So it's not hard to... We'll see how this unfolds. But outside of World War II, when we were all laser focused on a single purpose, and the miracles of production, live on in legend, it's hard to come up with, in the post-World War II period, an example of American industrial policy, other than like the moonshot, which was pretty narrow, and the Manhattan Project, but that was during the war, but that continued after. So other than those two national security and military-driven undertakings, hard to come up with an example of successful industrial policy here or anywhere.
I'm with you. And Intel, I don't know if they're the best stewards of capital, to your point regarding their return on equity over the last decade, compared to their peers in particular.
Sorry, Paul, I took us off track.
Back to another big company that's in the news headlines today is Walmart. Walmart reported their quarterly earnings and also announced a significant acquisition. We're going to tackle the earnings first, but I also want to touch upon the acquisition that they had as well. Walmart saw that their revenue in the quarter grew by 6% to $173 billion. They also saw that their same-store sales rose 4% over the last 12 months. So really strong numbers here for Walmart across the board. They did emphasize from a consumer standpoint, the reason that Walmart is so important for us to focus on is not only is it a huge employer in this country, but it also is a good bellwether for consumer spending. They do an enormous amount of transaction volume, and really what they were seeing, which is echoed by Home Depot, which we'll talk about later, is a pullback on discretionary purchases. There was a lot more focus on sort of the items that were necessary, the grocery side of things, but a little bit less on some of those other areas, whether it be patio furniture, electronics, things like that. That's really what we saw from their quarterly report. They also announced, as I mentioned, that they will be purchasing Vizio in a $2.3 billion acquisition. Vizio is a TV maker, and we talked about this a little bit last week when it was rumored that they may purchase them. And the reason that Walmart is making this acquisition from a strategic standpoint is obviously they do a fantastic job in selling goods in their store, and they've also made a lot of inroads on selling goods online to try and narrow the gap with Amazon, one of their big competitors. They're now trying to diversify their revenue stream by building in some revenue from its ad space and selling ads on its platform. The thought process with acquiring Vizio, and this was news to me, I had to talk it through with Tucker and Chuck next week, when they're speaking about putting ads on the TV, a Vizio TV, we're not talking about during your commercial breaks, what you may see on Channel 5 or anything like that. But this is on the TV, on the home screen. This is where they would be able to sell ads to people. It also is a data grab as well. If you have the TVs with Vizio on Walmart's platform, they'll get a lot of information about consumers, what they're watching, and that makes it an easier sell to those people purchasing ad space out there.
Yeah, market appears to like what Walmart is implementing and I guess pulling off year to date. The total return on Walmart, so including any dividends, up over 8%. The sector, and I'm using the consumer staples sector, the publicly traded basket of consumer staple stocks, up a little under 1.75%. So for what that is worth, the market is weighing in with a positive verdict.
Some other anecdotes from the quarterly earnings report that I found interesting were I spoke about the discretionary purchases. They saw a pullback there, Walmart did, but they also were able to keep up their revenue and their same-store sales because they were able to more effectively cater to what they deem to be the higher income families across the United States. So those families making over $100,000 per household, they found that the offerings that they had from parking lot order, pickup, and delivery were able to attract some of those higher income earners out there to keep up the sales traction that they've seen. They also did about $100 billion in global digital sales. That's been a big push of Walmart to really get more of a digital presence versus just their physical location. So all in all, as Mark mentioned, it seems to be pretty well received by Wall Street, both their quarterly earnings as well as the acquisition of Vizio, which I believe will close in the middle of this year, middle to end of this year. The stock is up about 4% today on
so
that news.
What do we expect from that? Cheap TVs with some advertising?
Cheap TVs, they're much more concerned about the software than they are the hardware. So the focus is to incorporate ad sales through Vizio's platform on the software side, less so selling the physical TVs. So to your point, you could see some pretty cheap TV deals, Walmart pairing up with Vizio, because what they want is your information. Like everyone else out there, sure, they want your information. They want to know what is Marc Fandetti streaming, what is he watching, so that they can pivot to, and Chuck gave this example last week, so I'm stealing it from him, so they can sell you this new grill, or I have my kids streaming all sorts of kid shows on there, they can sell the newest, Paw Patrol action figure toy, or whatever it may be. They want that information so they can turn around to advertisers and say, hey, we've got all this info, these targeted ads that you put here will be effective, and try and beat Amazon at their own game. Amazon, Google, and Facebook really dominate the ad sales space, and Walmart is trying to make more inroads
Would
there.
you buy a TV that effectively spied? This isn't new. TVs have been given away several times in the past, I'm going to say 20 years, and I'll group computers in with that. Computers, there was a free PC undertaking in the, late 90s, early 2000s. There was a little banner at the bottom. It fizzled.
Yep.
And there have been a few attempts at giving away TVs if you were willing to put up with an ad bar and an activity monitoring bar in the past.
As long as it's
maybe
not
Walmart can.
As long as it's not overwhelming. I don't believe that it will be something that is constant through your TV viewing. It's more when you turn on the system, but we'll have to gather more information if that is the case. But if you want to tell people that I'm watching Diners, Drive-Ins, and Dives on a Friday night, then you can go for it. That data is up for grabs, as most of our data is. It seems like you're just unable to dodge it these days, no matter what platform you're on. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be talking about Home Depot, who came out with their earnings report, and some interesting tidbits on the American consumer and home improvement projects. That's right after this break on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Home Depot reported its quarterly earnings this morning here as we continue on with a busy day of earnings. We just talked about Walmart's earnings before the break here. What Home Depot saw was similar patterns to what we saw with Walmart, where the CEO characterized this past year as a year of moderation. Of course, Home Depot did fantastic during the pandemic era as interest rates were brought down to significant lows and we were all trapped in our house. So there was a lot more scrutiny on improving those four walls that you're surrounded by or the exterior of your house. This year in 2023, or rather last year in 2023, they reported that there was a real concerted effort to be more focused on moderation. There was a putting off of big projects out there that would require any type of borrowing, which makes quite a bit of sense as home equity lines of credits have soared to 7 or 8% that were once at 3 or 4%. In terms of diving into the numbers in general here, they did see that their sales growth dropped 3% year over year. That was largely anticipated. The reason that the stock is trading a bit down today, I think the last I had seen it, it was trading down a couple percent. Let's see where, actually up 0.25% at the moment, but initially was trading down slightly because they anticipate sales growth for fiscal 2024 to come in at 1% rather than 1.6% expectations. So a little bit more moderate sales growth going into this year. The other tidbit that I did enjoy from this report is the size of customer tickets at Home Depot. They saw it drop from $90 in the prior year in 2022 to about $88 this year. You might say, hey, $2, that's not a significant drop. But with inflation that we've seen is a little bit smaller in terms of the ticket size that we're used to seeing from Home Depot here. People not filling up those carts as much.
I gauge the health of big box stores, big box home improvement stores by the number of inducements I get. So I got in the mail today, and I see this because I get USPS informed delivery. If you don't have it, it's a really cool. I just discovered it. People have probably known about it for 10 years.
I don't know.
I'm kind of a late bloomer.
Educate us.
Informed delivery shows you a picture of what mail is coming that day, and you get an email update every morning. If you don't get any mail, which I often don't because I don't have many friends, but if you don't get much mail, you don't get an email. But if every day, otherwise you will. So, for example, today I got a Home Depot. You have to have a Home Depot credit card.
Okay.
But now Lowe's has slightly better terms, 5% off every day on their card. Home Depot gives you more frequent 10% offs, though, for what it's worth.
Gotcha.
And my gauge since 2008, when Home Depot and Lowe's started going nuts with inducements, is the more frequently I get these,
the slower they're seeing volume.
The worse their outlook. And I've noticed, for what it's worth, maybe you have too if you get these from Home Depot, not so much from Lowe's lately, but that's my sort of bellwether go-to. And they've picked up for what it is worth.
It reflects in the numbers here. It is a slowdown. To be fair, they saw just such tremendous demand. It was almost going to be hard to replicate when everyone was trapped in their house.
That's still a lot. Think about it. $90 at Home Depot.
Yeah.
What are you buying?
Home Depot is a classic case where you get in there though, and you just
you got to be disciplined. That's amateur hour. You got to know what you're going in there for.
For me, it's so seldom that I can get there that when you get there, it's like I'm gonna get what I need to get.
Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, and a wide variety of water sports and the relaxation you deserve. So go to visitusvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Capital One is buying Discover for $35 billion. We're going to touch upon this a little bit. We may need to dive into it a little bit further in the second hour of the show. But maybe I'll just cover it here.
Why don't you just summarize that for the folks?
To me, it is interesting. Visa and MasterCard are the dominant players in the card network space. Oftentimes, most cards that you're going to have are going to be tethered to one of those two. Discover is one of the few other ones out there that actually has its own card network where payments are processed. And what I mean by the network is basically the merchant, if you go to your local convenience store or wherever you're purchasing goods from, they are charged a small fee for you to swipe your Visa or MasterCard out there. Discover is another option. Capital One acquiring them is to get exposure to a payment network that actually has its own vehicle to process payments, as well as adding some more card holders on the platform for Capital One.
Fascinating.
No,
it is.
To me, it's fascinating.
I want to see the government step in because Lena Khan or whoever the trustbusters are want to kill this thing.
That's to me why this
Biden
is
administration
interesting.
licking its chops.
It's
another
really
villain.
narrowing down the competition in the space to have this merger. Capital One is the 9th largest bank, so we'll see what happens there. That's all the time that we have for the first hour here on the Financial Exchange, but we got much more to cover in the second hour. Continuing on in the commercial real estate market and much, much more. That's right after this break.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's DAVMA.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit DAVMA.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome back to the second hour of the Financial Exchange. Just taking a look around at markets. We've got the S&P 500 off about 0.5%, the NASDAQ off about 1%, and the Russell 2000 off about 1.2%, and the Dow is slightly up about 18 or 20 points. As we went over during the first hour of the show, been a very busy day here in the Financial Exchange. We went through Home Depot's earnings, which saw a little bit weakness in terms of sales data there. Walmart acquired Vizio, a TV maker, for $2.3 billion and came out with a pretty strong quarterly earnings report. Capital One announced that they have acquired Discover. That is subject to regulatory approval, but that was news as well. And we also broke down some of the inflation data that we saw last week here. Taking a look around at some of the other major indicators, the U.S. 10-year Treasury is off about 5 basis points at about 4.25, and oil sits down at about 1% or $78 a barrel.
Can I ask about inflation and economic growth? Those two things are intertwined. Typically, an economy that's running in excess of our capacity to produce, when demand, if you want to think about it this way, exceeds supply, that puts upward pressure on prices. That's the traditional model of the process of inflation. If you had to worry about one or the other, do you think I feel like Chuck here because Chuck poses questions like this, but this is not a trick question. Do you think inflation's more likely to be the worry this year, or economic growth likely to be on people, i.e. recession likely to be on people's minds? Which do you think is more likely to be an issue?
To me, it would be inflation that I'm more concerned about.
So growth that's too strong, given the economy's potential to produce.
The demand will not wane enough under the current fiscal policy that we have. That is more of my concern. I continue
Could
to
you expand fiscal policy. So
with perhaps interest rates not being restrictive enough, or not having the desired effect that the Fed wanted them to have in terms of the economic activity that
So
we've
what about
seen.
you said fiscal? Did you mean deficits as well? Because that's an interesting point that doesn't come up enough.
That is another piece of it as well. Just perhaps heading into an election cycle, you just won't really see. Well, those
yes. No one's talking about deficits or cutting spending.
Right.
Some on the political right are, God love them, but no one is seriously. And they'll probably forget about that as soon as their guy gets in, if he gets in.
Easily.
But no one's talking about fiscal discipline for the most part at the very top of the national tickets.
How about you to answer your own question?
It's a fair. I don't know where I come down on that. I've always been.
You've been ringing the bell for inflation,
about inflation
for a
because
long time.
I haven't seen underlying, much like the 70s, though it's dangerous to draw parallels because it's not going to unfold like that decade did. The problem then was that underlying inflation never really came down. If you want to look at core, i.e. ex food and energy, I'm saying i.e. a lot. I don't know why. I never say that. If you want to look at core, which is less food and energy, you can use that as your measure of inflation in the 70s because we actually don't have some of the measures that we prefer here, like median and trim mean and some of the others for that decade. But core inflation never really became very well behaved in the 70s. So when those waves hit the oil price shock of 73, 74, and again OPEC 2 in 79 and the Iran revolution and the Soviets invading Afghanistan and pressure on food prices in the early and late 70s, when those shocks hit, underlying inflation was already too high. And that's how you got double-digit headline inflation. I guess I worry now that the camp that's declared victory over inflation is falling into a similar trap, and that underlying inflation, if you measure it using the price in the middle, the median, which takes out the extremes, which makes it a nice gauge of core, not food and energy, but literally core, or the trend in inflation. Those measures that zero in on the trend or underlying inflation suggest it's running somewhere, and I'll just be very broad and say 3 to 5%, depending on your time frame and your measure. If the economy's hit with another series of shocks, energy price shocks, some shock to productivity, shocks can come in lots of different forms. We always say energy, but they can come from any sector. What will happen to inflation? What will be the required response? So maybe like you, to answer my own question and to get back to yours, I tend to think because growth has been very strong relative to potential and that there's persistence in growth. A strong quarter doesn't guarantee a subsequent very strong quarter, but they're highly correlated though. So I tend to think inflation will probably be the bigger problem this year, but the result of that could be recession because the Fed is forced to keep rates higher for longer or raise them further, God forbid. And that will, of course, tip the economy into recession. But we can't forget, recession is the typical cure for inflation that's too high. That's how you stomp out excess demand.
Also not noted by us, a labor market that continues to be really resilient.
That's where the demand's coming from.
It's hard to point to any cracks in that sector of things.
And no matter what you look at, what looks soft right now? All the traditional measures, capacity utilization, labor market measures that you mentioned, measures of wage growth, they're all pretty robust right now.
We shall see.
Sorry for taking us off track,
that's it's an interesting point. It's really the biggest focus for this year, so it's important to provide that context there. Shifting gears a little bit and tying to Mark's not parallel of the 1970s, but oil in the United States, we are in a much different place than we were in the 70s, where the U.S. last year saw a tremendous increase in terms of the amount of crude oil output in 2023. It was a jump of $1 million barrels a day in 2023. However, for 2024, it is anticipated that our country's crude oil output is going to increase by just 170,000 barrels a day in 2024. I hesitate to really bring up any idea of predictions or notions on where energy prices are going to go. I've just gotten burnt. Not to say I've made huge declarations on where they're going to go, but predicting it is a fool's errand. I continue to come back to that. I'm not going to get sucked into.
Don't worry, Paul. Nobody's relying on you for this.
Well, they shouldn't, but they shouldn't even rely on the experts, because I'm not going to get sucked into this BS on CNBC, which says oil at $100 is one of the quick links here. I'm not going to get sucked into reading it or speculating about that because it's just too hard to really say. But the point that was mentioned here is that there really has been a focus by these companies domestically here in the United States to return cash to shareholders. That's been a really big focus. These energy producers have gotten absolutely burned in the past during these boom and bust cycles of the energy market. As a result, there's really a lot less focus on drilling for new wells. So that part I certainly am behind, that the output side of things, besides having some sort of significant technical innovation, it doesn't seem like in the near term, unless we see a spike up again to $100 a barrel, everyone will stick their drills back into the ground. But it doesn't seem like we'll see a tremendous
No,
bump
they're fighting it. This is one of those politically charged issues where people on either side blame the other guy for high energy prices, or if you're a rabid environmentalist, you think energy prices are too low and that we're all driving too much. Well, that ain't going to change. So we either resign to prices where they are today, which is where the big producers want to keep them. They're not. They are returning capital. They're not, as you say, they're not buying more drills with it. So there really is no political solution to this. I know Donald Trump will say, I'm going to free up federal land everywhere for drilling. Ain't nobody going to drill. They've already told us this. You can go look at their recent. Press conferences with the financial press and analysts that cover these sectors. CEOs in these sectors are telling us we don't want prices to come down. I'm not sure there's a lot that can be. If you're in the energy prices seem too high, I'm tired of paying close to $3 a gallon for gasoline. There's not much of a political solution there, it seems to me, based on what the actual heads of energy producing companies are saying. Not much of a political remedy.
No,
there.
they finally learned from past mistakes. At least it seems like for the moment. The increase that I was mentioning there, the $170,000. I keep saying dollars. 170,000 barrels a day in 2024 will be the smallest since 2016. So it certainly is going to be much less on the supply side of things than we've seen in past years.
But we're producing at a record, though, right? We're over 13 million barrels a day.
Yeah, it is. It really is important to note that the Permian Basin, which is West Texas to southeast New Mexico, has accounted for almost all of our oil output growth since the pandemic. Last year, the U.S. produced 13 million barrels a day, which would be a record high and more than any other country, as per the Wall Street Journal here. So it's not as if we're not producing. This article is just emphasizing that we're not going to increase production as much as we did last year, that we're slowing a little bit, perhaps making us a little bit more susceptible to any OPEC impact, but I caution against really making a significant prediction there. One solution people may argue is driving electric vehicles. I'm just kidding. I don't think that's going to solve the oil demand side of things, but we're going to take a quick break here on the Financial Exchange, and when we come back, we're going to talk about the world's biggest electric vehicle market is slowing, in addition to the United States market. That's right after this break.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
There's no bad time to review your financial planning strategy, but with spring coming soon, the perfect time is right now. Hi, this is Chuck Zada from the Armstrong Advisory Group. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's packed with information about planning for a one-time expense this year, like a new car or family vacation, and how that purchase might affect your finances. We also look at how to plan for major future expenses, like a new home or a child's college education. Take the time now to address any issues that may affect your financial strategy and spring clean your finances. The guide is free, and it's yours today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. Well, yesterday, 26-year-old William Byron won the Daytona 500, and I watched every single minute of it because my 5-year-old son insisted on doing so. Wasn't bad, I might say. The Daytona 500 is the premier race on the NASCAR circuit and has been so for over 60 years. Trivia question today. How many laps does it take to complete the Daytona 500? Once again, how many laps does it take to complete the Daytona 500? Be the seventh person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the seventh correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Is that a trick question? That's true.
I don't know. Is it, Paul?
I want to know how many tanks of gas, how many gallons of gas do they use? How many sets of tires do they go through?
Yeah. I saw them change tires 3 times.
Okay. How long's the race?
Well, we can't tell you that.
That's the question.
Oh, I thought you said how many laps was the question.
Yeah, how many laps?
I'm sorry, I meant in terms of time.
Oh, time. With the crash, we had like 2 big crashes. It was close to 4 hours.
Oh gosh.
But there's a lot of downtime when they have to clean up the track. So
okay.
It wasn't bad.
Even the world's biggest electric vehicle market is slowing down. China's government is urging car makers to expand overseas as BYD, which is the biggest electric vehicle maker in the world, they surpassed Tesla last year as the top global seller. It's heavily subsidized by China, and there's now encouragement from the Chinese government to expand operations outside of just China in order to service other parts of the world, because domestic demand in China has slowed down a bit. BYD is able to make these cars extremely affordable. The hang-up with electric vehicles has been the price tag associated with them. There is BYD's cheapest car sells for around $11,000 in China. This has put a tremendous amount of pressure on Tesla for the subsidies that China is providing BYD. It's made Tesla really note that it's had slower growth this year, particularly in China, because the government is subsidizing these incredibly cheap vehicles. In general, the electric vehicle market finds itself at a really interesting point. All that we heard talk about last year from auto manufacturers here, Ford and GM, was how they were going to pour billions of dollars into developing their electric vehicle production capabilities. And a lot of those automakers, such as GM and Ford, have really pumped the brakes, pun intended, on the amount of expansion in that space, because the demand, Mark, just really hasn't been there. And there's continued concerns that I have on electric vehicles, and I'm sure many other listeners do too, on range anxiety and the infrastructure in place to service these electric vehicles.
Yeah, I don't need range anxiety. I'm trying to cut back on anxiety. No, it's a pain. And when you lose power, which I do for some reason all too frequently in Rentham where I live, I wonder, what if I drove electric? What if I were in the middle of charging and I had to go to work, or I had a medical event and needed to drive myself somewhere, or needed to drive somebody else in relation to a medical event? These crazy outlier situations crop up in the crevices of my mind. You need a gas backup. Why we committed to electric and not hybrid? A proven technology that doesn't that doesn't beget range anxiety is just beyond me. To go all in on any one technology, history teaches, I think, is a mistake. It's noble. It's a noble goal, but we've got hybrid, and it doesn't have all the attendant drawbacks.
Well, Ford and GM have always been strong stewards of their capital, so I'm sure that they're doing a very good job of allocating their resources properly. But all jokes aside, Toyota, I give them a heck of a lot of credit, because they were the ones who emphasized what Mark just mentioned, that they said, gee, we're not going to go all the way in here, because I made the analogy last year that the other auto manufacturers were shoving all their poker chips right in the middle of the table. They were betting on the electric vehicle market to be their area of growth, and Toyota didn't. They got criticized for it, but they really said, we're going to take a more measured approach and focus a little bit more on the hybrid side of things. And so far, heading into this year, it may have paid off so far, that bet. And also, the other point that I make is that story in Chicago regarding electric vehicles during the cold snap that we saw over the last month or so really hit home to me, this idea that with extreme temperatures from the Midwest region, it's just very difficult to sometimes get enough power to charge your car, or it will really shorten the amount of time that your car will have range for. And that concerned me incredibly, to have you need a garage that's well temperature monitored in order to do it.
Paul, I don't understand the goal. If there's a quantifiable goal, and there is in terms of emission reduction, forget about whether or not you agree with human-caused global warming. It appears to be happening, and we may be contributing to it.
Sure.
Now, conservatives like me can either get on board with good solutions like nuclear power and flexible, environmentally friendly solutions that are market-driven, not government-driven, or we can sit there with our heads in the sand and let the left dominate this conversation. Forgive me for a little political diatribe, but I'm frustrated with the lack of contributions on the political right to solutions to global warming. It's time to step up. And there are good, again, market-oriented solutions to this, one of which is letting consumers decide which they want, electric or hybrid, or just tiny cars like me. I drive a compact car, and I get ridiculed probably, and I feel insecure as a result. But it's not... the emissions are modest, to say the least. So it has to be, as John McCain once said, an all-of-the-above type approach. And why, as you just put it, Paul, we'd put all our chips on EV with all its obvious drawbacks is beyond me.
It'll be interesting to see how it plays out over the course of this year and what we see from the electric vehicle demand for 2024. Taking a look around at markets, we've got the Dow Jones off about 14 points, the S&P 500 off about 28 points, or a little over 0.5%, and the NASDAQ is off over 1 full percent today, 170 points. We saw some of the big market movers today. Discover Financial was announced to be acquired by Capital One. Their stock is up 14% on that news. We also saw Walmart trending in a positive direction, up close to about 4% off its quarterly earnings report and its acquisition of Vizio, the TV maker.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to
double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, how many laps does it take to complete the Daytona 500? It's not 500, it's 200. The Daytona International Speedway is a 2.5-mile long track, and a 500-mile race requires, carry the 200 laps to complete. Winner today was Charles from Westboro, Mass, taking home the Financial Exchange Show t-shirt, and Charles is also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
How are we going to do that with electric cars when they phase out internal combustion?
Just let them charge for half an hour.
The pit stop will be charging.
It'll be like hockey period
You
breaks.
come back like
where
8
you can
hours later.
Go grab a beer and something.
24-hour broadcast.
No, seriously. If they phase out, has anybody... I don't want to fire up the Daytona crowd any more than they probably already are about certain political issues.
I don't think
But are
that's-
we talking about phasing out internal combustion engine powered car racing?
No, not in my life. Not in our lifetime.
But
I don't
can
think
they?
so.
What are they going to get? A special exemption?
Probably.
If the rest of us are forced to drive
It's a sport.
underpowered,
It's a
unreliable
sport.
electric cars, it's a sport?
Yeah.
Okay,
Yeah.
so's driving to work. Paul, you and I are going to start a racing team. You, me, and Tuck are going to start a racing team, and then we can keep our internal combustion engine powered cars. No, really. So that's going to...
It's like Formula One cars. They're not like street legal. You can't just have those cruising down.
No,
the
I understand
pike.
that,
You know,
but-
it's going to be the same thing. It's I don't.
Isn't
You guys don't wear a helmet for driving to work?
I don't think the EV change. We're obviously being facetious, bringing it up in general.
I'm being
but
somewhat facetious, but I'm not sure they're not going to try
A
to
little
phase that.
facetious.
How can they
a little stitious.
Tucker's cracking himself up over there. But how do they allow that to continue? But I have to drive a stupid electric car. No, I don't have to, not yet, but they're cooking it up here in Massachusetts.
I think it's years away.
and New Hampshire and Rhode Island, too. Well, our entire listening area.
We have bigger fish to fry
Okay,
to
sorry.
worry about
That's a little rhetorical.
NASCAR and its future, because I don't care about NASCAR and their future. Realtors are in crisis and home buyers could be the winners. That is an article from the Wall Street Journal. In October, a Kansas City jury delivered a verdict, a $1.8 billion verdict against the National Association of Realtors regarding the home sale fees being artificially high and them acting together in a collusive probably not the word, but acting in a manner where they are conspiring against us home buyers out there. And it's a really interesting area to me, Mark, because for so long, the 5% number for realtor commissions has just been set in stone. And there really is very little wiggle room on that percentage fee. Sometimes you can get brokers to take it down a little bit if you have a relationship or to get a deal closed, but that 5 has been very standard for a while. And coming from the financial services industry, where there's been a tremendous amount of scrutiny on pricing and commissions assessed for trading purposes, which now have been pretty much eliminated at many of the major broker dealers out there, finally there is some pricing pressure on realtor fees, and we could see after this verdict a elimination or much less often that 5% commission assessed.
You could,
on
but I
sales.
bet you the range doesn't end up being too wide. I think financial advisory services are a good example. Everybody's pretty much in the same ballpark, but there's no collusion. And I think that is the right word. And you said conspiracy. I think that's the right word, too. It's a conspiracy and restraint of trade, I think, is the way the original Anti-Monopoly Act referred to it. But historians in the audience will correct me if I'm wrong. So they could still eyeball, what others are up to and get in the ballpark without statutory is not the right word, but a regulated by an industry body commission schedule. So we'll I don't think it'll be a windfall, but there'll be more variation.
Variation is probably
and
is the
people
best
who
way to
don't
put it.
need services, who think they know everything, like I used to before I realized I knew nothing about buying a house when I did it almost 20 years ago now. And I probably did benefit from the help of a realtor. But people who think they know everything, like I used to think I did, might go for a
hybrid sort of approach.
Yeah, so no, you get 2%. Just make sure I don't do anything illegal or that I'm not getting.
You kind of borrow them
hoodwinked.
for their lister for their NMLS registration or something like that. I believe Mike did a similar approach to that in selling one of his homes on the show, where he took on the responsibilities of selling it and worked with a company that had that sort of
for a
hybrid
reduced
arrangement.
fee.
For a reduced,
okay, so there'll be
reduced
more
fee.
choice, I would think, like that. But for those who need hand-holding, there's the more expensive but more intimate and intensive option. So I would hope for more choice as a result of this.
The National Association of Realtors, they only have about $1 billion of assets as a group. They have 1.5 million members. As I mentioned, that verdict was $1.8 billion that was assessed against them. So certainly puts them in jeopardy going forward here.
If you've had a successful career and want to make sure you protect your assets, well, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all of the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for more than 30 years. Let them help you too. Get their new guide called Back to the Basics today by calling 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The commercial real estate market continues to garner a significant amount of scrutiny as U.S. banks are scrutinized as to how much they have set aside on their books to absorb potential losses in the space. And I found this piece interesting in the Financial Times, where typically where the way banks operate is they will have perhaps 10% set aside for credit card potential delinquencies that they might run into. Because if you're lending someone money on a credit card, that's not secured by anything. It's just lending money to Paul or Mark, and hopefully we pay back, and our credit score is sort of something that they can use as a punitive measure if we don't pay things back. So they set aside more for losses there. The commercial real estate market is different. It's secured by an asset very often. So a large office building on Federal Street in Boston has a loan against it. There is actually physical real estate that backs that loan. Typically, losses set aside for those are only about 2 to 3%. These banks are required to set aside those losses in case of a market falling apart. They go by historical averages. I think we can all agree that going by historical averages in the office market or the multifamily and others, really the office market particularly, is perhaps not the best guide when you're looking at a bank and their losses set aside.
I think the good news is that these risk managers' approach was forged in the furnace of the Great Recession and the unusually high number of defaults and failures of both loans and institutions that occurred then. So I would hope they're more conservative than previous generations of those that manage these risks at firms. And when they tell us they think it, big banks especially, that probably tend to be more sophisticated. Also, though, responsibility is more diffused. So you could argue with diffused accountability, they may be more willing to take risks that in retrospect end up being stupid. But when they tell us they've got sufficient, that they're sufficiently padded against any conceivable worst-case type scenario, look, the market appears to believe it. I'm looking at the S&P Financials Index, which is just the financials component of the S&P 500. It's broken out into a lot of industry subsectors, and you can always compare a stock to its industry over a period of time and see whether it's doing, for example, better or worse for what that is worth. Financials are doing fine. They're up a little more than the market as a whole year to date, despite this steady drumbeat of awful news from the commercial property
I
sector.
would ask almost to look at that less from the financials, but more from the regional banking. You know, the KBW, I think, is one of the benchmarks out there, because this commercial real estate issue that we're running into, while private equity is tied up into it, there's a lot more of an impact to something like a New York Community Bank or all the companies that we spoke about last year. Bank of America, they did a great example in this Financial Times piece pointing out that Brian Moynihan, the CEO, was asked about their exposure on the commercial real estate side of things. He had mentioned that $5 billion of their commercial real estate debt was in an area that could potentially be subject to a delinquency. Bank of America made $30 billion last year. They have $3.2 trillion in assets. So $5 billion, while it sounds like a big number to you and I, is minuscule if you're looking at the balance sheet impact. And that is what I've heard is the constant across all these big guys, JP Morgan, which are in that index that you're mentioning there, Wells Fargo, Citigroup, Goldman, Morgan Stanley. They're not as exposed to this as your regional bank may be.
Yeah, that's the reason I went to that, is that the article is about the biggest banks.
Right.
But to your point, real estate in various pockets, geographic pockets, and thus financial institutions that are more narrowly focused getting hammered this year.
Oh, yeah.
Biggest banks, though, appear to be
immune,
chastened, to have been chastened by the lessons of 2008.
We're going to take a break here on the Financial Exchange. When we come back, we'll be doing a little bit of Stack Roulette. That's right after this.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law, and if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic. And you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
All of us at the Financial Exchange are truly thankful for our partnership with the Disabled American Veterans Department of Massachusetts. You can help our great American heroes too by making a donation today. Your gifts can support the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
All right, time for a little bit of Stack Roulette. Mark, I will let you lead off here.
Thanks, Paul. Wall Street Journal has an article, a column actually, by preeminent finance columnist Jason Zweig. Title of the article is, title of the commentary is, a fund with a 95% yield, 94.9 actually, I'm rounding up. You guessed it, Zweig says there's a catch. I'm not going to pick on the ETF. I'll just make the general point that you shouldn't use current or distribution yield on an investment product to gauge its likely income. That could be the result of that distribution yield, or what it's recently paid out could be the result of special factors, one-offs. Look at total return. Mm-hmm. Look at SEC yield, as Zweig says in the article. Or if you're looking at a bond fund, look at yield to maturity. More selective, narrower measures could again reflect one-offs that are not indicative of an investment product's potential. And if you're not sure how to interpret something, and we in the investment business have to check once in a while, I do anyway, to make sure I'm interpreting measures that investment managers report correctly. Google it, find a reputable site that covers the concept, or ask a professional. They'd be happy, I'm sure, to help.
The rise and fall of Drizzly, one of Boston's great startup stories. Drizzly was sold to Uber for $1 billion I believe it was last March that sale was closed. They are now going to be shuttering the doors on Drizzly later this year, I believe, starting April 1st. It was founded by a BC senior in 2012 with the simple premise of why couldn't he have beer delivered to his dorm room as a senior at Boston College. It went on to have tremendous success, breaking into a really fragmented business, which is connecting with all local liquor stores, which are run by mom and pop, just all sorts of different sort of setups that you have there. They were able to link up with these liquor stores and have their inventory posted on a mobile site. But now Uber will be taking in that functionality in-house. And there's questions as to really what the acquisition meant for Uber. Was it a case that they just wanted to grab the liquor store, build business owners on their platform, and then just sort of put this out to pasture? It's a very difficult business to operate in. The delivery space in general, really low margins, a lot of need for human capital. It's a tough business. It's certainly successful for these guys who did it locally and sold out for $1 billion. But the 168 employees of Drizzly will be out of work effective on April 1st.
So they bought a competitor and then they killed it. They bought a potential competitor in a space they maybe wanted to get into.
The space that they wanted to get into, Instacart and DoorDash, they do a little bit of the alcohol delivery, but not really a ton of it. It is so difficult because the way that it has to be sold is through the employees of the liquor store. I believe it's not as if you can just have an Instacart employee delivering it. Now, it may vary from place to place, but it was a very hard market to break into for Drizzly here. So that was, I guess, a sad local story to see, but they did cash out with a nice $1 billion sale. And Uber, you just wonder really where they're going to go. They finally turned some sort of profit last year after I saw the total number of cumulative losses, years and years of losing money. They finally made a slight profit.
It's funny how hard it is to make money in transport. I'll just be very broad, general, and say transportation, whether it's airlines, railroads, rental car companies. This capital costs so much money to keep in service that profitability is, I'm not going to say rare, because I'll just reveal my ignorance here and say I really don't know how consistently profitable some of them are, but the airlines are chronically unprofitable. It's not quite boom bust, but very hard to consistently generate, say, free cash flow if you're running an airline. Similarly with railroads, and it sounds like the same challenges exist in these other very capital-intensive.
Exactly. They gave a great example in here of one of the liquor stores that pushed back against the initial adaptation of Drizzly, where you have your delivery driver deliver a bottle of wine to the north end that's $15, and he's gone for an hour because he hits rush hour traffic. How efficient is that from a capital perspective to have a driver out there for the? It's great for us as the end consumer to benefit from it, but same thing with DoorDash. If you look at a delivery order on the food that you get from a local restaurant, they're pocketing a couple bucks if they're lucky on that order. It's a really razor thin margin.
Amazon Same Day Prime too, though. Don't you scratch your? You guys ever use it? Just like
Yes.
opportunistically.
Yeah, I've gotten something on the same day.
Guys always got a much nicer car than I have. And I'm always like one of 4 stops over a very broad geographic area, and you just scratch your head and say, how are these people making money?
AWS is paying for it. Their cloud services business is paying for it.
You mean subsidized?
Yes.
It.
Yeah.
Because so it's the loss-making, but
you get scale, and you get everyone on your platform, and you get that annual fee for Prime to fund it. But really, it's the subsidy from the cloud services business, which margins are 60 or 70%. You have that
can
other.
They do that? Like Prime showing, this is a totally different business line, but Prime showing advertisements now.
Well, you get enough people on your platform. That's how you get scale to get them down. You lose money, but then you get all.
How do we make what volume?
Volume and advertisers.
Okay.
I guess. Hey,
what do I?
They've done all right.
Obviously, I have no idea.
That's all the time that we have for this episode of the Financial Exchange, but we'll be back with you again tomorrow morning at 10 o'clock. Thanks so much for joining us.